This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. Going to give you a stock market update, and we have a market snapback. And the question becomes, is this just a launching pad for this market to break out and continue to the upside? So we're going to delve into that, take a hard look, go through these market conditions to see if what's taken place has actually improved things or made it a little bit worse. So let's go ahead and get into that. Now, again, some of the techniques I'm going to talk about, especially with respect to the MACD and the ADX, when I get into the trend and the momentum, you can learn more from by reading my book. I am offering it in a PDF format right now. It's rabilstockresearch.com/book. You can get more information. Also, if you enjoy the content, please hit that like button and also subscribe. Okay, so right off the bat, I can see that the sentiment has dropped pretty dramatically. So in a bull market, we don't need the sentiment to turn negative. In other words, we don't need more bears than bulls. We just need a big drop from a peak. So even just based on, so we had this drop here that caused it to move into the 20s, but then we popped back up into the low to mid 30s with this rally. But then in just one bad week, we got a pretty substantial drop all the way down to 21% more bulls than bears. So when we see that, that definitely flips this more to the positive end of the spectrum. Now, it's kind of rare where you see positive sentiment right near a high and near an all-time high like that. I'm sorry, negative sentiment, meaning people got a little, it's almost like there's some fear here, even though we're right near the peak. All right. So but we have to take that into account. And I think I've moved that back to the positive side. And, I mean, it just sort of tells you people are quick to be maybe a little scared about the market, maybe quick to think that things are going to turn down. And when that's the case, again, we're trying to try and figure out what the masses are thinking and then play the opposite of that. All right. At least for that part of the market conditions. Now, I didn't fix the overbought, oversold. It should actually be up at 49, but that's okay. 59. It moved up a little bit, but it's still in the neutral camp. Where it starts to get interesting is we start to look at the volatility. I'm going to go into that in a second. So first of all, I did flip the daily trend back to positive. I'll show you how you could have left it neutral if you, it really could have been either one, at least the way I look at it. But to me, the strength and the return of what took place and the fact that the 18-day is rising, I put it back into the positive camp, but I still have a neutral for both the weekly and the daily momentum. All right. Volatility is still not so great. Let's go ahead and look at that right now. All right. Now, when we look at the weekly, it's pretty blatant because we had this declining moving average all the way into April of this year. Right. And now that line is rising. So don't get too caught up into the jagged moves that the ATR makes. Look at the moving average. It's a smoothing way of kind of seeing the volatility shift. So the volatility has shifted back to the upside, and there's not a real threat of breaking this line right now. So I think we have to look at this, and especially if you're trading like longer term. Now I put the 18-month in green and the quarterly 18 here, and then this is the 18 week, and you can see it's not so this was more of we've retraced back into support and we're emerging again. That's a lower risk entry point, right? Or even when you're crossing, just turning around, or where you're coming back to the quarterly line. Okay, see how we came back and tested the quarterly line? To me, these are lower risk periods than we are here. And the fact that the volatility is up, just gotta take that into account and recognize this is not a premium entry point for longer term trades. All right. If you want to find longer term entries, try and find them near the quarterly, especially if you're doing longer term trades for ETFs and stuff like that. I might do a video on ETF investing. Let me know in the comment area if that would be of interest to anybody. All right, so if we go to the daily, we are seeing what I mentioned is even though we're moving up, the size of the bars are staying pretty big, and that's causing this ATR to move up again. Now, it hasn't actually turned the moving average back up officially. It's more flat right now. So, I have it at neutral, but it's not the type of condition. So these are the types of conditions you want when the market's moving up. That's more ideal. What does this tell me? What's taking place here? I think the odds favor, rather than trying to break out, right? And just continue to the upside, I think it favors more channeling, more sideways action. All right, but I'm going to go into a couple stocks and show you why the market is truly moving and what are the leaders of this move and why it's very possible that could mean that we're going to take off again. Okay, and if that's the case, again, you got to be really careful about your trading in this environment, because when the volatility is up, the odds of getting stopped out in your trades go up. All right. It doesn't mean the market's going down, but the odds of you making money using the same strategies that you were using back here, and expecting the same result, I think it's just not going to happen. So you got to be a little bit more careful. Try and buy when things are oversold if you want to play that game. But be very careful about doing it as we're approaching overbought levels, especially on a short-term basis. All right, I want to switch over to the different time frames, and I mentioned that we have this tail that formed. So we had last month, we had a pretty big tail form. This is the midpoint. So I actually overlaid. I want to show you what I've done here. I've got the 4 in gray, but I've also put in gray the midpoint. I've connected the midpoints here. I just put it on my chart. I actually used to have this on all the time, so I know what the midpoint is. So I like to know what the midpoint is of these big bars. I talk about that a lot. And so you can see how we held the midpoint of that bar. All right. Now, if we break the midpoint of that, then that weakens these big bars. All right. So you look at these monster bars, look at the midpoint of those bars. And if we come back and test, it tells you a lot. You want to know what that is. The other thing that's kind of helpful with this is you can almost use this like a short-term crossover signal if you get bullish price action. Now, sometimes you'll get a big bar to the upside, but it might close poorly, and this could try and cross. But you want to have confirmation with the price action, but you can see kind of an upside crossover, and then we had a little test here, but it never crossed back over. Now, this did have the crossover, and this is what I'm talking about, and this is why we needed to break the midpoint of this bar to kind of confirm that this was a downside crossover. Hopefully that makes sense. Just something that I do kind of keep an eye on. Not necessarily something you have to be overly concerned about, but I thought I would just add that in this week. All right, now if we go back to the weekly chart, the thing that's interesting to me is that we still have a rising 18-week, right? Sitting above a rising 40-week. The trend is still up. Now we tried to break this line. We came down and closed below the 18. But if you notice, and what I've said in the past, not only do you need to close below that, but the next week you need to take out the low of the bar that closed below. You see how that did not happen? All right, same thing here. We came down and we closed below the 18, but then the next week we never took out the low of that bar. All right, that's different than this, where we broke the low and then followed through. So that's a true break of the 18. And then this is the turn back up, the signal back to the positive side of the 18. Now, breaking the 18 doesn't mean the end of the world if we have a good underlying condition in place. But I'm just kind of pointing that out. That's true for any moving average. This was sort of that was a break, but it was sort of a false break, and it quickly kind of turned back around of the 40 line. You see how we broke the 40? That was a clear break of the 40, and then it immediately emerged with the big green bar. That's going to happen sometimes, especially if it's happening with the zero line reversal and low ADX condition. But so when you look at the way this is played out, we're holding this line. I mean, it almost looks like, okay, we had a really sharp decline, a rally up. We came back to the midpoint and held, and now it wants to emerge again. I mean, we have to give that as a possibility. It's certainly a possibility. Now, what I don't like about this scenario is MACD really isn't in a great position right now, even though it does qualify as another reverse divergence. So again, that's why I put it at neutral, not negative. Most people would look at this as a negative, looking very negative, but I don't really see it that way. It's more of a neutral pattern. Now, the other reason that I am a little concerned about the potential for this to just break out and go up is because the ADX has dropped down under 25 for the first time, this year, right? So we've had a strong ADX condition, and now it's dropping down. Now, most of the time when that happens, that means more consolidation. It doesn't mean breakout, all right? When you're going to break out with a low ADX, you stay low long enough to create a pattern, some kind of a pattern that you can draw trend lines on, and then you can break out from it. So this isn't really the type of pattern or condition of ADX that I would expect for this to break out and follow through. Now, we also have to open up the possibility that we break out and fail, all right? Because, I mean, just based on the high volatility condition we're in. I mean, I'm trying to give you all the different scenarios just because it's not crystal clear. I did my video for my subscribers this week and trying to tell them, look, this is not, there's some bullish things and there's some bearish things. It's not crystal clear. One of the things that made it, I thought, a little bit questionable was, we had these big distribution bars, these big red declining bars, and you broke the 18, you broke the 40, but look at how the MACD was just coming back down to the zero line. Also notice how red DI really couldn't get anything going, hadn't gotten anything going. Even with two monster down bars, you really didn't get this kind of showing the type of strength that you would expect. So, and the other thing I wanted to point out is this strong move, uninterrupted move to the upside, it doesn't typically mean that we're getting ready to just plummet to the downside. It just doesn't typically work that way. Now, you could consolidate off of this big move, but to expect it to just fall apart, it doesn't really make a whole lot of sense. Now, the question becomes, with this drop, do we just immediately emerge and break out? I think it's more likely that we at least consolidate a little bit in the short term. But the fact that the MACD held here, it's the reason why I've got this at the neutral camp. It's not bullish. It's not crazy bullish, but it's also not bearish. All right. Now, just lastly, we'll look at what's taking place on the hourly. I think, we do have to respect this reversal. So we got a 1, 2, 3. We broke the downtrend line. We came back and tested, and we turned back to the upside. All right. So, I mean, we have that in place. We're back up towards these highs. We don't have a confirmed reversal until we do something like that. We're going to need another higher low and another higher high to get a little bit more convincing evidence. Green DI is starting to perk up again after a pretty long period of kind of red being on top. So, I mean, I think there's pretty good strength in this move, I have to admit. I mean, this is a lot of strength behind both MACD and ADX. So it's possible we could pull back and go again and do something like that. And if that happens, then I think we have to respect that the micro trend has turned back to the upside, and that could increase the chances of breaking out. Now, I did want to just take a second and show you this. So here's NVIDIA. Look at look at what's going on. We'll just look at the weekly. I mean, look at what's taking place here. You had this strong move to the upside, violent move down, big move off the low, came down, and now we're getting a nice surge instead of spending more time consolidating, right? So look at AVGO. This is even stronger. Look at this big red bar followed by a big green bar. So they're not giving up on their appetite for these AI stocks. The AI stocks and the semiconductors tend to be the ones that are showing the most strength this week. So, I mean, do you really think that they're just going to go right back to this stuff and break this stuff out again? I mean, it's really possible that's what's going to happen here. What I would tell you is that I don't think that's the healthiest thing that could happen, because if it does, if we just take off again and these are the leaders, you're going to leave a lot of stuff behind. It's going to be very narrow. And you can take AVGO and NVDA are two of the biggest stocks in the world, right? I mean, if you look at the S&P, they're two of the biggest components. So those alone breaking out and moving up are going to help the market move higher. It's just not the type of healthy condition, and tends to lead to some more type of a climatic action, especially when you look at the monthly chart. If you make another push to the upside and you get really stretched away. Now, it would take a little bit of time for that to happen, and we have moved sideways for 3 or 4 months. So, I mean, just letting you know, look at how these bars on the monthly chart of this AVGO, you see how we're forming these tails? We've got tails at the top, but we've also got them at the lows. And that could set the stage for another surge to the upside. I think we got to keep that open as a real possibility. All right, that's the update for the week. Let me know if you have any questions.